Hello, everyone. Welcome to today's session with Impact Taxation and Financial Services. In this session, we'll have a look at the possibilities that whether you can rent out a part of your home and save tax on it. All right, let's have a look. Okay, so what are the benefits of renting out part of your home? So the first benefit is quite obvious. Because with the cost of living increase at the moment, and then also the interest rate increase is very hard for a lot of families to keep up with the mortgage repayment. Okay, so renting out a part of our house can help to alleviate household expenses. And then, of course, potentially it can give you some more tax savings as well. And let's have a look at how this can be done. Okay, so firstly, let's have a look at how is tax calculated when you're renting out part of your home. Okay, so the step one is you need to measure up your house and calculate the percentage on the part you rent out. All right. Then step two, you need to find the period you rent it out for the year, if it's not for the full year, as a percentage of the year as well. Yeah. So let's say if you rent out 300 days out of 365 days of the year, and then you use 300 divided by 365, that's a percentage. And then step three, find all common deductions for your house. Okay, depreciation, interest, council rates, repair maintenance. So the common rental property deductions that's applicable to your home as well when you rent out a part of it. Okay. Then step four is using rental income minus all deductions. Of course, the deductions will be based on your percentage. So 2% you need to consider in step one and step two. Step one is measure up the percentage of the area, okay, of your home. Step two is a percentage of the time if you haven't rented out for the full year. Okay, then the 2% multiplied together, then you can reach the full percentage. Okay, you can calculate on the total deduction you can claim to reduce the rental income. Okay, all right. So what's the major downside for renting out part of your house is the future capital gains tax. All right. So normally, as you might already know, Maine residents are exempt from capital gains tax. So you don't need to pay capital gains tax on Maine residents when you sell it. But if you do use, or you did use, a part of the property to generate income, including rental income, you'll need to pay capital gains tax for this portion when you're selling the property in the future. Okay, based on the percentage you have rent out. Okay, and then of course, because of this reason, it's a good idea to get your home valued when you first start using it for rental or for business purposes. Okay, you need to know this value later when you sell the property. All right, and then so when can you save tax on the on renting out a part of your home? So it's actually when you incur a tax loss. Okay, so how would you create a loss then, or how can a loss be generated? Okay, it's actually when income minus deductions is actually a minus figure. So that's actually a tax loss. And then remember all the income and deductions we mentioned. So there are common expenses you pay for your property anyway. And then out of all this, the major deduction will be interest and depreciation. So interest is a net outgoing, yeah, but depreciation is actually not a cash flow outgoing when you think about it. It's actually just a calculation based on the value of your property. So you do need to have a look at how old your property is. Generally speaking, as a rule of thumb, if your property is more than 40 years old, it probably doesn't have much value left to be depreciated, because the capital works or the major building part of the property value can be depreciated in 40 years. Okay, so of course, if you did make some major additions to it, or major redecoration, or maybe a major change to a part of the house, that's going to be different. Yeah, but generally speaking, if it's too old, you didn't do any changes to it, then there won't be much depreciation to be claimed. Okay, but generally speaking, income minus depreciation minus interest minus all the other small expenses, council rates, water rates, and then if you do have tax loss, then that tax loss can be used to offset your other income to reduce your overall tax. Okay, so that's how you can potentially save tax from renting out a part of your home. All right, that's everything. So just a brief introduction about myself again. You can have a quick look. All right, so I'm a CPA and also a registered tax agent, and do have some other educations. If you have any questions on any tax issues or about this particular topic, you can let us know. So we have our contact details here. All right, that's everything. Thank you so much for joining us for this online session.